Good morning, everyone. It's Friday, October 14th. Yesterday was an absolutely insane day in the markets. Half the time today talking about SPY. One thing I do want to remind everyone is to please try and tie back your thoughts and ideas back to actionable trades or what you did in the past, stuff that actually has some meat, if you will. Other than that, just a little bit of housekeeping. Finally got both the Twitch and YouTube streams up, and I'll leave a comment in a little bit with those links. But titles and everything should be proper, and we should soon finish up with getting all the transcriptions going and stuff, so you can read or search at your own pace. It won't be labeled by user, but should still be pretty good. So looking forward to getting those transcriptions done over the weekend. But other than that, welcome back, everyone. How was yesterday, dare I ask?
Diamond hands, baby. Went from 32 cents on my SPY contracts to over $4.
Ooh, shit, that's a 12-bagger.
Last gamer portfolio jumped about $220 yesterday for no apparent reason other than SPY going up apparently. So awesome.
Wait, it wasn't predicted in the Tartstrology?
No, fucking blanketed for the 8th day in a row and possibly the 9th. I haven't gone outside yet.
All right.
Luce, what you into today?
I'm going to wait and see. I want to see what happens. That was a hell of a run up yesterday. So, yeah, either way, I'm Gucci. I'm good to go. I like my picks. I'm beating the markets now. If it drops, great, because I have big short positions that will make good money. So, but nothing really new, to be honest.
Yeah. So as a hedge with all this volatility, I've been thinking of shorting real estate. A couple of tickers I have in mind. The biggest one is SRS. I just have a very basic question. How does shorting residential real estate work? Where is the money coming from? Where is the money being made?
Nobody knows.
It's not something I play. Sorry, man. I wish I could answer.
Wait, okay. What are you asking? You said shorting it. Where does the money come from? Do you mean how do they make money? The real estate companies? What are you asking?
Yeah, if I'm being honest, my confusion is with real estate in general. I mean, how can the people in real estate be paid so well, but the companies do so awful? I'm targeting companies like Compass, who is one of the largest realtors in California. They're doing awful.
Yes.
Redfin, awful.
So all it is you have, okay, so real estate is cyclical, right? And a lot of the sectors, a lot of these industries, they are highly cyclical. Just people don't know market history at all, and they don't know how to zoom out on charts. So if you look at a lot of these companies before the great bull time, you'll see that the metals companies, the mining companies, well, oil and gas is much more obvious. Real estate at some point, they weren't making that much money. So they could be paying their realtors a lot of money, whatever, but at some point the revenues are just going to drop. So, I mean, that's how they make their money, right? Is off of their realtors through fees. They get a percentage of sales, stuff like that, right? And a lot of them actually do part of the mortgage packaging for the homeowners. But at some point, those fees are going to just crater because demand is going to slow down, supply is going to come back online. And by the way, real estate, you don't need to have a shit ton of houses being built for supply to come back online. All you need is people suddenly become willing to sell, and supply will increase substantially. It happens every single time in the past. So, yeah, it's called value trap. So, yeah.
So you're saying, Luce, it happens every time except until it doesn't.
It's true. Yeah, basically.
Well, I just got outside and look here. We got another blanketed ass day of nothing but clouds. So I have no fucking clue.
Is this like your thing, Mast? Like you go outside?
It's hard.
Astrology. It's the
Yeah,
only
this
time
is
it goes
based
outside.
astrology. This is the legit technical analysis for Tard astrology. I go up out into my backyard, look up at the sky, ask Orion for
All
his
right,
star
I
sign.
didn't really want to know that many details. I'm gonna be honest.
Let me summarize for you, Luce. Red in the morning, ape's morning. Red at night, ape's delight.
Oh, okay. I just think
That-
he needs to be outside like much more to just get more oxygen circulating. You know,
Does that
that's
apply?
all I was gonna say.
I
Does
can't
that
touch grass. I got astroturf.
does that apply to my sailboat too, Hardy?
Is that where you live?
Only if you're an ape. And
All
your
right.
dinghy doesn't count there, sad.
Dingy.
Hey, I just wanted to piggy comment. The one thing that I am noticing is that permitting is down for new constructions, right? Because the developers have been having a hard time getting materials because of supply chain on top of financing, right? So the development is slowing down. So I don't know that you may have people leaving the markets, in their homes to, say apartments, but there's not a ton of supply that's forecasted to be delivered in, the near term, at least from what I've been seeing.
Perhaps, but consider the amount of supply that was blown away by Ian, as a quick example.
Yeah, but that only impacts a very specific niche segment of the market and doesn't speak to the overall trends going on nationally. I mean, that's just one particular pocket, if you will, of real estate.
Word. All right. So why don't we either talk new news or trades? What y'all got?
Yeah, we can talk bank earnings.
Yes, we can. Did City report? What do you want to talk about?
Well, yeah, four big ones did. Wells Fargo, Citi, JP Morgan, and Wells Fargo. They all lost.
Wells Fargo reported twice. Very nice.
Yeah, true. I'm sorry. Already had some beers. Between 17 and 35% loss in net income. They did beat all expectations. But yeah, EPS was just really low from analysts. So I already had the ETF puts, XLF, but I will add to them long-term expiry December. I don't think the outlook is really good, and I do think that they have to add extra cash to cover bad debt that will come soon.
Wait. Like all of the banks? Because JP Morgan has $1.2 trillion in cash. And I think the other banks have a shit ton of cash as well.
Yeah, they do
Is
have
that
cash,
balance
but
sheet bash, Luce, or is that deposits?
asset under
That's
management.
that's what old Diamond said. Let's see.
I think that's deposits, not like the
There's no
cash
way
line
that
in
they
the
have
balance
that.
No,
sheet.
the guy said cash. Let's see. Let's find out.
No, I didn't say trillion. I said that they, as
No,
a
no. I
company,
mean,
they have
Jamie
to.
Dimon said cash, not you. You're not the man. Jamie Dimon's the man.
Okay, sorry. No, what I mean that they have to reserve more cash for bad debt in the coming months, quarters. So puts around even December, I think, are long enough to print. I will add to that position. I was expecting worse earnings than they showed today, but with lowering net income, I don't see that changing next quarter, so that they will have even lower net income for next quarter as well.
I think if you're just now shorting financials, I think you're really late because inflation is going to start turning like eventually. It's not going to be this high forever, right? But when it does, financials are set like to take off because a lot of them are pretty undervalued. And with interest rates so damn high, they're going to be making literally bank.
Right, but
It's-
what's the volume of all the lending products and the financial products that'll go out loose? It's true, the spread on individual products will be larger and therefore their margins are higher, but the number of products being sold back and forth or traded will be substantially lower because of the high interest rate, right? So I'm of the
yes,
opinion
but that's
it's net negative on like
oh
a
no
dollar
no
for
no
dollar basis.
not for banks. No, if interest rates are very high, so okay, the deal making is why they were making so much money through the past couple of years, right? And there was a shit ton of deal making because of very very low interest rates, right? And easy money basically. But classically, banks do very fucking well when spreads are wide, even if demand goes down because there's so much room for those spreads. So if you go from 0.25% interest rates to what 3.75, it's going to be 4%, past 4%. That's massive extra income for the banks. So whatever has been diminished, like it's very much offset. So
what's the mortgage right now on a $300,000 house? Let's say 6.5. Is that a fair rate?
Sure, yeah.
So they're paying 3.25, I think, to the Fed. So that's what is that? They're basically doubling the interest, or the spread is 325 basis points. When rates were 0.25%, 25 basis points, I think mortgages were as low as 2.5, or let's say 3 to be a little bit more fair to them. So 275 basis points. So that's a 1/3 increase in margin. So I would expect, or at least judging by the drop in mortgage applications, just in the mortgage space alone, the market has fallen, or the volume has fallen more than 30%. That's where I'm getting my that's what I'm basing my assumption on. Now I recognize there are more products than mortgages, but what are the other, I guess, loan products or rates products where the bank is getting its spread?
It's just across the board, man. Like all the products that banks do. Is that what you're asking? Like
So,
JP Morgan?
I don't know if CD volume is published, for example. I don't think CD buying is up. As a quick, most of it is going to I bonds for those who can scrape together the 10K maximum, right? And then what were the others?
Even business loans are going down as well. But
My point, Luce, is they're making a higher spread per dollar loaned. That's true, but they're lending 30% less dollars.
Okay, I'm talking
Or more
about
than 30%
long term. When inflation turns, I said eventually when inflation turns, like everybody's talking about volumes right now, right? Like what they're doing right now. This is not the norm. This is not going to maintain forever. So in a more typical economic environment, if interest rates are really high, the banks are making a shit ton of money. Maybe mortgages drop, right? Maybe they drop a good amount and they come back just a little bit and they don't go back to the previous high. But across the board, spreads are going to be so damn wide for the banks versus that 25% basis point rate that was being charged, right? Or the flat federal funds rate, right? Spreads are going to be so damn wide that it's a very good and very strong environment for banks. So this has always happened, like through the banking cycles, whenever interest rates were high.
So
that's all I'm saying.
Can I give a bearish case for post turning interest rate, like CPI
Let's
turn?
hear it, Trash.
Okay, so one of the problems that we're going to run into is that the method that the Fed is using to reduce CPI is basically by boosting unemployment. So banks are going to get probably hit with a bunch of defaults, credit defaults, right around the same time that turn occurs. So yes, they're ideally positioned, but that's really only if the people who have outstanding loans, the businesses and individuals with outstanding loans, can still pay those loans. And based on what we've discussed so far, it sounds like they probably won't, because the real estate buyers have now bought well above their price range. Auto buyers have bought way above their price range. Any business that's going to be borrowing right now is not going to be able to afford those interest rates. I think we're going to deal with, I think there's a big credit default problem that's baked in here that we should not ignore.
I think you're ignoring the ridiculous amount of cash that people have that they saved up from stimulus that's still really high.
People save money
this is a
from the
normal
stimulus?
time.
Big
There's a
facts.
shit ton of cash savings. It's come down over the past several months because of inflation, but in short, U.S. Americans are literally more rich than they've ever been in history. So to say just one side, like, oh, loans are really high and interest rates are really high, you're missing the other part of the picture. I'm not saying it's all rosy, but there are two sides to this, you see.
So, Luce, pre-pandemic, September 2019, according to, who is this? Statista, show source. Basically, pre-COVID, savings rate was 750 basis points, 7.5%. As of June 2022, that savings rate is now 5.1%, and it's probably going to keep going down. So where are you getting that U.S. is more U.S. like everyman is
look up
more flush with cash than ever?
Like cash, actual cash that people have, not just the savings rate. Look up the total amount of cash in U.S. bank deposits and savings deposits.
But Luce, are you adjusting for inflation? Meaning, yes, you can have more cash, but if the cash isn't worth anything.
Okay, all I'm saying is there's one other piece to that. When you say loans really high, everybody's going to default, you're missing one piece of the puzzle.
Yeah.
That's all I'm saying. I'm not saying you're completely wrong. I'm just saying there's another piece of the puzzle. That's it.
Are you going by Value Penguin, talking about the median and average bank account balance? Because I agree, I only have data here up to 2019. Median bank account was $5,300, and the average bank account was $41,000, which, well, says a lot about skew, but that's a separate discussion. Basically, in terms of plays, I get the impression that any mortgages that are taken out between, let's say, 6 months ago and 2 years from now are more likely to be refinanced or more likely to be prepaid, let's say, beyond 2 years from now, because of rates falling. And so with that, yes, banks and loan originators are likely to go up in 2 years, if only because they can charge an additional, let's say, 50 basis points as a fee to open up a new loan or have the refinance done. In the meantime, because the same, let's say, $2,000 a month mortgage now buys you around 40% as much property as it did 8 months ago, I would expect the volume of real estate transactions to go down and the amount of potential defaults, unless the government puts in some sort of anti-foreclosure moratorium again, to go up.
Also, keep in mind credit, more from a personal side. Right now, that number's hovering between 49% of Americans are behind at least one payment. People are quite leveraged, so the availability of getting that credit becomes far more difficult as that situation continues.
I think we've beat this topic.
Real quick, this is probably way too late, but I wanted to piggyback on the chart astrology.
Please do.
I saw a logo, and it was a cat with made out of charts. The top was red, the middle was green, and the bottom was red. I feel like SPY is gonna be red today because it was green yesterday, and it was red the day before.
Do you know why it was green? It's not because of CPI.
Why was it green?
Yeah, was it the cat?
I hope so.
No, crude oil was it crude oil? Where is it?
It was green because there was more buying activity than selling. It was stronger. That's why it was green. And
Yeah,
the cat.
crude oil inventories was 9.9 million barrels versus the expected 0.9 million barrels. So pretty much right after 11 a.m. when that news was announced, that's when you saw the huge run up in SPY. So
Oh, but
it wasn't
also,
because
when you
the CPI, while lower than expected, was still pretty shit year over year. And so SPY
right.
rightfully gapped down. And then when the crude oil number came out, that's when SPY rocketed back up because of some weird amount of institutional restart buying. Excuse me,
Okay,
restarted
so
institutional buying.
also the buying of puts, would that also increase the price of SPY?
No.
No. Okay.
Yeah, so there were actually several things that happened yesterday. One of them was freaking Putin's team. It's called what on earth? Is were you Atlantis? Anyways, so old Putin's goons, they were saying they're
Hey,
still
Luce, I'm
open to
sorry.
negotiations. Huh?
Can
Yeah,
people
okay.
can
Wait,
people close their mics when you're not talking? Thanks.
oh yeah, thank you. Yeah, old Putin's goons, they were saying that they're still willing to do negotiations. When that news came out, the market seemed to tick up a bit, and there was for the options side. So there was actually a shit ton of puts that had been bought previously. There was a big IV crush through CPI, and the put call ratio was dropping during the day, which reflects a lot of either cashing out puts, so selling the puts, right, which creates some buying pressure, buying calls, or a combination of the two. The put call ratio was dropping pretty damn fast, so there were like several factors that were pushing the markets up.
I usually don't speak on there, but I want to piggyback on that real estate. Basically, in the business that I'm in, I'm an accountant, and I'm seeing a lot of bad loans being put out by the banks, mainly BOA, with those new zero. What are those like the zero down, zero closing? These loans are terrible. A lot of people can't really afford the house that they're buying, and the interest is way too high.
Dag, are you okay?
Yeah, I'm cool. So basically, what happens is a lot of these people are making documents, so it's like bad document loans, and they're not even really checking because they usually have to take what's called a 4506T form, and they have to verify your income, like in what they're called transcripts. They verify them against like your real, like the paper, the 1040s that you send in. They verify those, and once they verify those, that's during the closing process, and then you get the loan. But they're actually giving these people loans just based on the 1040s alone. So those are a lot of bad loans.
Ninja 2.0, great.
Are you excited? Wait.
Oh, that's
yes,
pure
you should.
sarcasm. That's what got us into trouble the first time.
All right. Okay.
Can I talk about SPY real quick, or is my microphone like super messed up?
You're
No,
good.
you're
Let's
good.
talk about
Fine.
SPY.
You're better now.
Why is it higher in pre-market, Scald? Do tell us.
I was going to talk about yesterday. I had a bunch of calls. Then in the morning, I doubled down on them. And then I took profit when I hit break even, so I didn't take a loss. Had I held them, I would have had a 27 bagger on my hands. So don't
Fucking
paper it, kids.
damn, Captain Hindsight. Fucking great news, man. I thought you were gonna save us from conversation, and you just gave us a hindsight trade.
Hindsight is
Oh, I'm
2020.
so sorry. I'm so sorry. Anyway, I'm bullish on SPY today.
So what's the play, Scald? You're doing October 14, 375 calls?
I was going to look at the 372s, but 375 does look interesting also.
Slightly higher open interest and volume. Figured that would tickle your interest.
Oh, yeah, I'm seeing that. No, that's good.
Watch listing.
I'm on through the no balls, so I guess I got to do 375 now.
Well, all right. We got a lot of people up here, and everybody knows everything about banks now. I think we got banks covered. So, are there any other industries, maybe semiconductors, metals? What are you guys looking at?
I came in late. Did anyone discuss the Kroger move?
We have not discussed the Kroger move.
Okay. Looks like Kroger is going to buy Albertsons. I have not seen the numbers on that, nor the structure of the deal. Just for those of you who don't live in any of the markets, Albertsons is a pretty big retailer, or grocer rather. Seem to be handling margins quite well as grocery goes, but it looks like Kroger is going to, buy them out. Don't know the confidence on the deal. We'll hear more about it today, but one to keep your eyes on.
So it looks like Albertsons is down in pre-market after yesterday's run. Although,
yeah, word is they're going to face some resistance.
So the way I would probably play this is to do a buy right, where you buy 100 shares of Albertsons and then sell maybe a $24 call expiring 2 weeks from now. So that way you can capture any extrinsic value from the implied volatility as a result of yesterday's movement. And so long as the price doesn't go below $24, which is below the recent lows, you should be able to unwind that trade for a modest profit. So thank you, NoHo, for raising Albertsons up.
I got to play also. I work for UPS, and I was told by somebody I work with that like one of the largest unions of like UPS that they're planning on going on strike like next year or something like that, and that could actually affect the stock of UPS in the coming future. So potentially,
which union is this? The drivers, the loaders?
Loaders.
What's the reason that you think that's going to happen? Do you have any kind of like proof, or is it just
they
a
don't
hunch?
really pay us well enough, and the trucks are hot as fuck. It's a lot of like logistical like health reasons.
You said sometime next year?
Yeah.
When's the current contract that you guys are under? When does that expire?
What do you mean?
Aren't you guys currently under a labor contract between the union and UPS? When does that expire?
I am not sure.
I'm 80% sure these guys are Teamsters, and if that's the case, that should be semi-public information. One thing to watch, I believe they're going after FedEx again. So look for any if Teamsters win any battles, that might add a little case to the bull case here for the unions.
Yeah, but if it's somewhere next year, it's pretty hard to make a play on that, to be honest.
Moving on.
Just real quick, if we don't get paid, like if we don't get increases in pays and like better conditions, they're planning for a strike.
Understood. Good luck with you. I hope you make
that should help inflation, huh? You know?
Nice.
Less delivery of goods. Look at that. You're trying to solve problems.
All right.
Real quick, even though this is a long play,
I've got a pairs trade.
Hang on, Scott. What you got? No.
Oh no, I was saying even though that is a long-term trade, let's say what he's saying, if you take it at face value, then you look for expensive things like measures to retain employees, up in salary, more creamer in the coffee room. I don't know, but that stuff costs money and something to watch.
Well, they have been hiring a bunch of new employees. And what they do is when they're hiring new employees, they kind of tell us that we don't really need to join the union. So there's that.
Wait, your managers come up to you and just say you don't need to join the union. Is that what I'm hearing?
When I was when I was a new hire and I was in the classroom, they told me they was telling me about the union, how the union can help you keep your job and everything. But then the manager was like, but like when I was really there and I really looked into the union, I was like, I don't need this. This isn't for me.
Hiring scabs, man.
All right.
I'm pretty sure that's not fully legal, but anyway, to do that.
All right. Hey, Scald, were you wanting to talk about a play or just anything?
Yeah, I got a play. So obviously there's the short on AGNC puts dated for November, $7. Thanks. Shout out to Strovell for that play. It's been very profitable. On the other side of it, longing RWT. I previously had shares of it. I doubled down. I'm going to continue acquiring shares as close to $5.50 as I can. The difference here is AG and they both have heavy exposure to mortgage-backed securities. The difference is AG&C has 8.7 leverage, and RWT only has 1.4 leverage on their REIT. So that's why I'm long those guys and short AG&C. So that's a play I'm still fully building out, but is in progress.
Nice plays there, Scald.
Hey, so we talked about grocery stores, Kroger acquiring Albertsons. I want to talk about what's in grocery stores, and specifically a product that I think is headed straight to zero is Beyond Meat. They're down pre-market today after some bad news releases, and I don't think they make a good product. I think similar to how Uber promised self-driving robo-taxis, Beyond Meat kind of tried to promise synthetic meat that was more nutritionally beneficial for you than actual meat, and I think they failed in their mission, and therefore they're a failure as a company, and I'm going to short them.
Yeah, and the COO bit a guy's nose off.
Did he try to do it again? Is that the bad news?
No, they're laying off a ton of people. But I just find it interesting that the CEO of a company that's targeting like people that don't eat meat ate somebody's face meat.
It was a prosthetic nose, Liz.
Oh, all organic.
I just dropped the Albertsons unwinding trade in the comments for those who want to attempt the buy right for themselves.
Oh,
I also showed my math.
Oh yeah, I got a play to share with y'all. If any of y'all are looking for a loan and you don't mind shorting shares directly, mind you, Poshmark is getting acquired for $17.90 supposedly in the first quarter of next year. So not too far, maybe 3 to 5 months from now, right? They're trading at about $17.80 pre-market, which is a bit odd because the acquisition, I don't think it's been approved by shareholders. Somebody correct me if I'm wrong, but they're being acquired by a Korean company. I think Naver, I think is their name, Nav or something like that. And it was only a 15% premium to what the stock price is trading at the day before. I think, the company kind of sucks, right? But if you're an investor, you're not really happy with just a 15% premium, considering what the stock price has done. So I think there's a chance that the deal doesn't go through. But even if it does go through, interest rates are really fucking high. And a lot of you guys, I mean, let's face it, you got really bad credit, right? So you're going to pay like 10% on a personal loan. So if you shorted Poshmark directly, the cost to short, the cost to borrow is about 0.7% annualized right now. And the spread between where Poshmark is trading at right now and the acquisition price is about 10 cents. So that's another, I don't know, like 0.6%. So in other words, you could pay like a 1.2, 1.3% annualized interest rate to short Poshmark until they get acquired. And then you can use that money to YOLO and other stuff, and then you lose it, right? If the deal doesn't go through, that's a massive cherry on top. So, but that's a speculator, that's speculation. So yeah,
This
just a
sounds
nice
too
cheap
good to
loan.
be true. Is there any way it can go wrong?
If the shareholders, if everybody's like, we don't want the deal, we need more, and then the company Naver is like, okay, we'll give you more. But here's the thing: typically, let's say, okay, that's exactly what happens, right? If they were only giving a 15-20% premium originally, and they're not going to say, okay, $17.90 isn't enough, we'll give you 30. So like they'll raise it maybe a buck, right? So there's your risk, right? So I wouldn't call it arbitrage, anything like that, right? Well, you still got to pay something, right? But there's your risk. It's possible they come back and raise the offer. I think there's a fat chance of that happening because the company is not doing well. So I don't think they're in a good spot to negotiate at all. But those are just my thoughts. Cheap loan, yeah.
Yeah, talking about buyouts. I'm selling call credit spreads on Twitter. 53 and 54 strike. Selling the 53, buying the 54. I don't see Twitter getting delisted anytime soon, and that happens only if the deal goes through really soon. And even if the deals work out with Musk and Twitter, even then it will take probably a couple months before the stock gets delisted. And with the high interest people can get on their own money, the price of Twitter won't reach the buyout price anytime soon.
Hey, Luce, I have a question regarding one of your plays that your Coinbase with their news with Google. What are you thinking about that?
Yes. Oh, I'm still short Coinbase. Okay, so it's a risk. It's essentially a riskless deal for Google. It's just a partnership. So the stock price like spiked on the news, right, and then it just came right back down. Maybe it makes Coinbase more money, but I think they have a much bigger problem than just like a few partnerships that help them make a little bit extra in fees are going to fix, right? So I think they have a management problem. They're still issuing shares, so the diluting shareholders. They somehow didn't make more money when interest rates were going up because the amount of money that they make is too highly correlated with cryptocurrency prices. So there's a bull case in there somewhere where the company makes high fees because of the interest rates, but it's literally not happening. So to me, that's like, it's management. It's the company. The company is, I think they're kind of broken and they need cryptocurrency to shoot right back up. Maybe it does, right? Who the hell knows? But I think there's a low chance of cryptocurrency skyrocketing to where it was before because you don't have the liquidity that you had during the fantastic bull market. You remove that liquidity, prices come down across the board. Cryptocurrency is a gamble. It's not an investment. So people are going to pull their money out of that just as they've been doing. Without that liquidity returning, prices don't go way back up. So Coinbase is fucked.
I do want to point out that the liquidity in the crypto market came from a lot of rehypothecation going on. So someone would take their one Bitcoin, use it as collateral to borrow, let's say 10 Ethereum, use that 10 Ethereum to stake for BS token, use the staked BS token to buy an NFT that they then put up as collateral to borrow BSY token. And you basically had one Bitcoin representing something like 6 or 7 Bitcoin worth of leverage. And part of the problem is that leverage still exists in the market. And I'm of the opinion there will not be another crypto rally until all the leverage goes away. And that would put the price of Bitcoin at around $12,000 to $14,000 a coin, the point at which all leverage is gone. So
Basically,
I'm of the opinion
the Big Short movie.
basically, All the unwinding needs to happen, and Coinbase makes their money charging ridiculous spreads as an on-ramp. So until people are willing to pay those spreads to convert from their US trash tokens to crypto, puts on Coinbase.
Oh, okay. So Sad, you probably wanted to trade. So I've been shorting Coinbase for a while, but I've been collecting premiums. So the one part that's easy is I have March strike 50 puts. I've had a lot of those, but I'm selling short-term puts like October, and I'll have to roll those soon to November. So yeah, I have strike 50 March puts, and I'm selling strike 55 short-term puts. If the price drops by the end of next week, then I'll move those short puts down to strike 50. But yeah, and then I'm also selling calls. So I have a delta hedge short as well. So I have a few shares, and then I'm selling a good amount of calls on the shares that I'm holding. So yeah, I got a pretty big short on Coinbase. I think they're fucked.
Understood.
I want to talk about something that I was laughed at a month ago. Meta buying UFC. I mean, they're not buying it. They made a partnership, which is going to be great as a viewer to see the octagon in VR, maybe in first person. But I'm still going to put it out there. There's a huge fucking chance they're going to buy it. Endeavor Group is in a shithole.
Yeah.
Yeah.
Hey,
Endeavor Group is in a shithole.
You see Zuckerberg, like, he paid for like an entire arena or something, like for him and his wife.
Yeah.
You see that? Yeah,
It's all. I mean, it's fake news, but it's all signs. The signs are out there.
No,
boys.
that part's true, but your part is fake news, is what you're saying.
No. He didn't pay it for he didn't get the full arena to himself.
So what do you see them buying that for? Because that's about estimated $4 billion worth, no?
The complete Endeavor Group right now it's around 5 billion market cap. The company is in a shithole. The only profitable asset that they have is UFC. Even if they look, even if Meta puts out like 6, 7, 8 billion for UFC, it will be worth it at the end of it.
Do you think that's going to be the first valuable asset that Meta has?
Part of the problem.
Good roast.
Simple. Wouldn't Meta, by owning UFC, lose their Section 230 protections in the US?
I don't know what a Section 2.
It's what prevents websites from being sued for moderating content or having content posted by users. So by being the creator of content like a news organization, they lose the Section 230 protections.
But doesn't every company do that? Like YouTube has their own shit on, huh?
YouTube, so the YouTube TV channels and all that like curated content is actually owned by a separate entity that is being hosted on YouTube. So it's sort of like Google.
There is a workaround.
Agreement. Yeah, but my point is, I don't. Meta it cannot directly own UFC if they want to retain that specific protection.
No, I got you. It's a nice info to have, but like I'm still standing by it. I think that's a great value that they can get, and they can actually start to build their bullshit meta universe that they want to, or a VR platform.
Wait, so if dudes, what about the dudes that like to touch other dudes and like roll around with them on the floor, like in real life? How are they gonna do that in the metaverse?
I still do
YouTube.
that in the metaverse.
Hardly.
That's what ESPN Plus is for.
At ESPN Plus, the contract is, I think, done in like 2 years. I mean, listen, it's all bullshit, but it's getting very close to to an actual story.
So you're still bullish Meta? Then that's just simple and loose.
Yeah, why not? Yeah. I'm going to average down in like a week or two with a couple K more.
Yeah, I'm a value investor, man.
To sell. Will you sell me the puts for a good price, Simple?
Well, everything for you, Hardy.
Oh, thank you.
I'm just saying that the way Meta's been going, they're just a higher value Bed Bath & Beyond. A higher value company than one that is now below the market cap.
Wait, what? Like
he's high.
Way higher fucking value.
He's high.
Hey, all you guys. Okay. Hey, how about this? Simple and I, we fucking hate Meta. We fucking hate Facebook. We fucking hate Zuck. We hate everything about them. We hate the business. Look at the fucking financials, people, and look up the definition of value investing. That's it.
I
That's all I'm
said
How much
saying.
are you down on Meta?
I said bullshit metaverse. I fucking hate the idea and everything.
Yeah.
But I like the idea of watching UFC on VR, like being actual there next to the other octagon. That would be fucking sick if they made that. I mean, come on.
So to offer a counterplay on Meta, considering that they grew headcount something like 37% year over year, and their revenue and user growth is expected to be flat to slightly negative for this upcoming quarter, I'm expecting to buy puts, short-dated puts to take advantage of some gap that'll happen after the announcement. So let's see, the next earnings I think is October 26th. So slightly prior to that, I'll buy some Meta puts to see if I can take advantage of the gap. I'll release the price and strike shortly once I find a good one to use.
Weeb, if you didn't buy Pepsi, how are you not down like 20%? Because that's what I'm down on Meta. Like, tell me, what are you invested in that you're talking shit?
I like how we mentioned one company that we're bullish on that has like the best financials in fucking big tech. And then everybody's like, what about the one? Y'all have been losing money on all your fucking plays, man. Like 9 out of 10 of your plays have been losing money. Don't be salty. We're not the salty ones. We don't care. It's a long-term play. It's value investing, man. Look at the definition. That's it.
Yeah, and I said it's a bullshit that might come to a story. Like, I literally said it.
Yeah, make money in short-term puts.
Okay, like
doesn't matter.
I may be losing money on all my trades, but at least they're trades that I believe in. You don't even believe in Meta, and you're still bullish on it.
I believe
Holy
in money.
shit! What is this?
I believe in money.
No. I don't think
I like
that.
how he just
Money.
I like how he just said
money.
he's losing money on all of his trades.
Yeah,
we want money.
I'm pinching my fingers together, my fingers and my thumb. I'm like pinching quarters right now, you know, like next to the mic. Fucking money. Do financials, man. Look at financials. That's all I care about. I don't care about.
You won't believe. Go to church or a mosque.
Yeah, you fuckers. Yeah, all you guys. Bed Bath and Beyond. Bed Bath and Beyond. Yeah, because you fucking shop there every week, don't you? Get the fuck out of here with your.
All right, thank you for sharing, everybody. What other plays do we have?
You cut off a good moment there, Hardy. All right, yeah. So, all right, hey. Maybe Meta buys Endeavor, maybe not, right? But yeah, I think we had our monthly let's bash Meta talk. So yeah, let's move on to something else.
Well, real quick, what's your play on Endeavor, Simple? Because I bought some calls when you first mentioned it, and those puppies have gone to basically zero. So, well, what's your play?
Dude, who told you to buy calls in Endeavor?
Oh, I put a few bucks in it. You know, I was like, oh, well, okay, if this deal might go through, let's see what happens.
You see, he went through like 10% of it.
Okay, I've got a play. Actually, I've got a couple, but I'll start with one. Okay. Short-term calls on it's in the consumer staples industry. That's Kraft Heinz, like Kilo Hotel Charlie, General Mills, GIS, Golf India Sierra, Campbell Soup, Charlie Potato Sam, and K, like Kellogg. So my 10/21/36 calls printed pretty well yesterday, as well as January 2023. The thesis behind it is that historically, consumer staples, that they'll be sold off aggressively once risk appetite is back up, once quantitative easing starts happening. I've been bag holding Kraft Heinz, so I noticed in the past week or so that it's finally gotten into the green, and I looked into it, and this is, I guess, what I came across, or what I decided upon, and then far out long puts, especially, I guess, and also, oh God, I'm sorry, I lose my words. And once the Fed pivots, then probably printing on those puts slash holding for a bit over.
Which stock did you say you're bag holding on? What was the ticker?
Yeah, could you put those plays in the chat? You went pretty quick. My ears only go so fast.
Yeah, Sad's ears.
Sorry, I had an issue with the mute. That was Kraft Heinz, Kilo Hotel Charlie. Sure, I'll try to do the chat thing.
Thanks for
I
sharing.
also have a question about Kellogg's. Aren't they splitting into 3 separate stocks here in the near future, sometime soon?
And one of those companies is Beyond Nasty Ass Meat.
Oh, Excited Man is back. Wait, what do you mean? One of the companies is Beyond Meat.
Yeah, one of their companies is a meatless. They went into cereal, snacks, and meatless. Those are
so it's not literally Beyond Meat. You're saying
no. I'm just talking as a genre like Crazy Glue or duct tape.
Crazy. All right, gotcha.
Yeah, I have another play. Yesterday was announced that DWAC is also allowed, or like their platform is also allowed on the Google Play Store. They shot up like 30% or something. I immediately bought puts, but I'm adding today as well. I think they will just go back down to where they were like 2 days ago.
Well, you don't believe in the truth, man?
I only care about money, to be honest. I don't really care about politics.
Hey, my kind of guy.
That was a trick question.
Yeah, I think. I think DWAC. I think since Google's partnering with them, or they're not partnering, they're letting them on the platform. I think the shareholders will actually approve the deal now, the merger, because that was in question. So, what I think, if the deal's approved, the stock price then has permission to zoom below $10. If it's not approved, then it's just going to go to sit around 10, and then the shareholders, will be reimbursed, that money. So I'm actually glad that they're letting it on the platform, because now the stock price can properly tank.
Yesterday I bought puts 60
Loose.
but
Does this now mean that the potential pipe shares will also be unlocked, let's say 180 days after the deal is put through and the ticker changes?
I don't actually have details on the pipe shares.
All right.
Golden Lamp, were you saying something else? Is something you wanted to add?
Oh no, just my strike and expiry, but just buy puts.
Any thoughts on the change in the VIX over the last 2-3 months? Like, we're trading way above 30, and we pumped yesterday 2%, and today we're going up again, and it's still above 31. So
we're only 3% above 30, right? So I don't know if I'd call that way above. I would be concerned if VIX hit 40. That was the original level that Desmond had shared with us some time ago. But I imagine as we're going into election season, VIX will drift back down because the news cycle will be away from shenanigans of stocks and more on shenanigans of shitty politicians. And as a reminder, if you're a U.S. citizen, register to vote.
I threw up the chart of the VIX in the comments if anybody else wants to take a look.
Oh, very nice. Hey, where is Desmond? He's like the Michael Burry of Wall Street Bets. Where's that guy? Desmond, if you're here, raise your hand.
The Asian Michael Burry.
Audience of
Indian Michael Burry.
It doesn't have to be. Well, India's in Asia, but yeah, ethnicity.
That was fucking dumb of me.
And you're the non-American one.
Desmond, the price is right. Come on up. Hey, I think he missed his initial prediction, but I think there's a reason. So he's, don't confuse him with that crazy old Christian bastard that,
he's
like in 2000.
Speak now.
Oh, we got Desmond. Yeah. So I was just saying, Desmond, we're not confusing you with that crazy Christian bastard that was like the world's gonna end in 2000. And then, he was like, oh, never mind. I misheard God. He spoke very quietly. He spoke in my bad year. It's not 2000. It's 2010. And then, we see what happened with that. So you're not like that guy is what I'm saying.
Yeah, but who calls Indians Asians? Like, seriously. You confuse me, Sad.
They live in Asia. Hey, Desmond, go ahead and rebuttal to Luce's whatever he was saying.
Oh no, I just wanted him up here. I wasn't yeah. No, I'm a lover, not a debater. Well, I'm a master debater. No, I'm just kidding. Go ahead, Desmond.
Good morning, everyone. Right now you're currently saying that VIX is trading at 30, so it will go back down because of election year rally, which comes till November. So VIX will go down to 25 and, or below 20. So after that, around November, the market will start capitulating till January, and that's when VIX will hit 40. So currently, if you want to do a play, avoid any puts right now. I mean, we have bottom. The bottom was yesterday. There would be a choppy up move till 3900 XPX to 4000 SPX levels, and after that we will drop to 3200 SPX.
Desmond, just to hear you right, you said 3900 before we drop again.
Yeah, first 3900 SPX and then 3200 SPX.
And then the 3200 you're anticipating for next year or this year?
January 23.
Got it.
Hey, Desmond,
We got a couple minutes left when we get to some players. I'm sorry, Desmond, if you're not done, go ahead.
I was saying that 3200 is my base case. It could go lower to 2800 or 2500.
Wait, what?
Somebody wrote in the comments. Somebody wrote in the comments, "Oh boy, time for subtitles again." Why don't you put it in the comments, your plays, Desmond?
So I heard you, Desmond. You're saying 3,200 as the bottom post January 2023, and that at the moment we might be trending higher up to 4,000 on the S&P. I had a quick question for you though. The VIX, the 2 standard deviation 42. You're looking at the 3-year chart for that?
No, I'm just basically doing VIX on weekly and daily time frame.
Okay, good to know.
Yeah, I've got a puts going in on GM for 1028, hoping that they fail their earnings report.
What strike?
$30.
All right. Anybody else got some plays before we close?
Very anti-American. We would say.
Can't believe that. How could you short an American company like
What do you
GM?
what do you guys think of Soxel going to March 2020 levels? I think it's time for a bounce. I was going to play it.
If you want to make up for being anti-American, POWW, my local ammo manufacturer says that supply chain's easing up on components. They're starting to take more orders, especially with Canada now adopting the new service rifle. So that's going to be filled across civilian and military markets.
Yeah. All right. What else we got? We got about we got 60 seconds.
That last stock listed was a below the market cap.
Thanks, Weeb. Any last minute plays here before we close out for the week?
I'm looking at Sunrun. The chart's looking pretty appetizing, and their capitalization rate is insane. I think they're a very lucrative company.
Appetizing. Ooh.
Anybody want to talk about Soxel or no?
If you got to play, let's hear it.
Yeah, so they're at 5-year low, so March 2020 level, like COVID crash. So I think it's like ready for a bounce. I think the selling is done in the semiconductor industry. To be honest, like how low can they go, especially with the new like AMD graphics cards and or NVIDIA graphics cards and AMD processors coming out within the next couple months. So I was thinking about like watching for a bounce on Soxel, maybe run on the wheel strategy.
Yeah.
Yee.
All right. Well, thank you for sharing.
Yeah. Is those all the plays? Oh, it's market open.
All right, market's open. Try not to lose too much money, and we will see you all on